Anyone can start investing in art these days, and you don't have to be a millionaire or have a personal advisory team on your side. And if you want to diversify your portfolio away from more potentially volatile assets like stocks and ETFs, this is excellent news. So in this video, I'm covering a step-by-step guide on how you can begin investing in art. I'm also covering some of the pros and cons of this asset class so you can ultimately decide if it belongs in your portfolio or not. All right, so when it comes to investing in artwork, really the most traditional, straightforward way that you probably already know about is to purchase a piece of art and then to hold it and hope it appreciates over time. And art collectors do this all the time. They'll attend auctions or galleries or exhibitions, and they'll purchase artwork from either emerging or established artists to add to their collection and then to try and sell down the line. However, there are really two main downsides to this type of approach. The first is capital requirements. You typically need quite a bit of money if you're going to purchase artwork from an established artist and then try and sell it later on for a profit. And the second would just be research and time commitment. You have to actually research the artist you're investing in, go to auctions or exhibitions. Perhaps you have to work with an art buyer or someone who could actually assist you in making the purchase. So there's a lot of moving parts, and it's not as simple as logging into an online broker and purchasing a share of a company. So these two downsides are why many investors don't invest in art in the first place, or they consider it an asset class that's just off limits and not really accessible. However, this really doesn't have to be the case thanks to the rise of fractional investing platforms. So fractional investing platforms basically let you purchase tiny shares or fractions of an asset class instead of buying the whole thing. And fractional investing platforms have sprung up for all other kinds of asset classes, including artwork, wine, collectibles, and real estate. Now, in terms of artwork investing, companies like Masterworks actually let you buy shares of blue chip artwork without having to, have millions of dollars in the bank. And this includes million-dollar works from the likes of Banksy, Picasso, and Warhol. And Masterworks handles all of the work for you, ranging from finding the art, securitizing it, issuing shares to investors, and then letting you purchase them on its website. In fact, their experts analyze over 5 million data points to find the best works that you can invest in. And as an asset class, artwork is actually a pretty compelling investment in a lot of ways. According to Masterworks, contemporary artwork has also outpaced the S&P 500 in asset classes like real estate and gold since 1995. In fact, it's seen about 13.8% average annual returns. And Masterworks has handed members 21, 27, and 32% net returns for some of its past offerings. And so generally with Masterworks, what they'll do is they'll look for paintings that they can acquire and hold for a profit. They typically hold paintings for 3 to 10 years, although it can be a shorter time period. And at the end of that period, they'll sell it, distribute profits back to shareholders, and that is essentially how the process works. Now, you might be thinking that, holding a painting for 3 to 10 years is a pretty long-term investment, and that is true. Although Masterworks has a secondary marketplace where you can buy and sell shares without paying fees, so this does help with liquidity quite a bit. And one thing that's very interesting about artwork as an asset class is that it's not very strongly correlated to the general market or other asset classes. So historically, this has meant that artwork is a pretty decent investment during periods of high inflation or even during a recession because it doesn't correlate to the overall market. Artwork is also a $60+ billion market globally, and it's continuing to grow. Now, one thing I really want to stress about artwork and platforms like Masterworks is that past performance is not a guarantee of future results, so there are risks to investing in artwork that you have to consider, and that I'll cover later on in this video. Additionally, Masterworks is really not a short-term investment and shouldn't be viewed that way. Yes, it does have a secondary marketplace that helps with liquidity, but again, on average, it's holding paintings anywhere from 3 to 10 years before they sell. But the platform is incredibly easy to use, and it's really one of the simplest ways you can begin investing in art. And with 2023 on the horizon, thinking about some investments outside of the world of stocks and ETFs or even crypto could be a pretty smart move. I mean, you can think about it like this. Right now, the S&P 500 is trading at 17.5x its forward PE ratio. And so in other words, stocks are still a bit overvalued despite recent sell-offs, and that doesn't bode well for investors. In fact, right now, JP Morgan analysts declared that sharp declines will await stocks in the first half of 2023, so the outlook isn't too positive. JP Morgan analysts also expect that volatility is going to continue in the market, and they're really not alone. For example, according to strategists at Goldman Sachs, the stock market is in for a wild ride next year as they don't yet reflect the risk of a US recession. And if you've been following the recent news, I'm pretty sure I don't have to tell you about the state of the crypto market at the moment. And so when you look at the potentially bumpy future ahead for the market and some other asset classes like crypto really not doing too well, it's no surprise that people are turning to alternative assets like artwork right now. And now that you understand how to potentially invest in artwork, I think it's also important to outline some of the pros and cons of this asset class so you can make a decision that's right for you. So in terms of the pros, like I mentioned, one of the main ones is that artwork historically doesn't correlate with other asset classes. So it is an uncorrelated asset, you would say, and that can be very valuable for investors looking for some kind of safe havens during a recession or periods of high inflation. The second advantage of artwork investing is that it has the potential for outsized returns. So it has the potential to beat the market, in other words. So rather than just dollar cost averaging into a basic index fund, you might see higher returns with artwork investing. And really, the third pro of artwork investing is just for diversification's sake. So if you only invest in certain asset classes, your portfolio might not be as diversified as you'd want it to be, but companies like Masterworks help you achieve a bit more diversification by adding blue chip artwork to your portfolio. All right, but let's talk about the cons. And when it comes to artwork investing, one of the main ones has to be liquidity. Historically, artwork is not a liquid asset, meaning if you want to sell it and get your cash back immediately, it can be very difficult to do so because you have to find a buyer who actually wants your artwork. A second downside of investing in artwork are just the due diligence requirements. Again, investing in private artwork can take a lot of work. You have to find artists you want to invest in, you have to go to galleries or exhibitions, you might have to work with private art buyers or go to auction houses to try and actually get a sale. And one third downside you have to consider with artwork investing is that it generally doesn't generate any income. So with Masterworks, for example, or even just buying artwork yourself, there's the initial purchase, there's a holding period during which time you generate no income, and you're hoping that final sale pays you enough in profits to make up for all of that time you weren't generating any income. So if you invest in something like real estate or dividend stocks, you can reliably expect some form of income coming in maybe quarterly or annually. And this is why a lot of fixed income investors gravitate towards these asset classes. And so really the tricky thing here is that there's no one size fits all solution for deciding if you should invest in artwork or not. Some investors keep about 5 to 10% of their overall portfolio in alternatives, and this is probably a common recommendation you'll hear online, but other investors hold way more of their portfolio in alternative assets, and some hold none at all. So really you have to outline two things when deciding if artwork belongs in your portfolio. You have to understand your risk tolerance and what your investing goals are. At Investor Junkie, we still think you should consider other asset classes like stocks, ETFs, bonds, mutual funds, and real estate. But again, if you're looking for diversification and you want to dabble in alternatives, artwork should be on your radar. We even reached out to Masterworks to get an exclusive offer for our Investor Junkie readers and viewers. So if you click the link in the description box, you'll be able to skip the line, get priority access to Masterworks, and see the latest offerings on the platform. Thank you guys so much for watching. I hope you have a wonderful day. Don't forget to like, comment, and subscribe, and let us know what you think about the video, and we'll catch you guys in the next one.